Good morning. Welcome to the Market Open with me, Katie Pilbeam. Later on in the programme, I'll be joined by Richard Hunter, Head of Research at Wilson King Investment Management. But before that, let's go through the markets and see what's happening and set the stage for the trading day this Tuesday, May 30th. So the markets were, of course, closed on Monday, but reached a fresh high on Friday on the back of renewed concerns about prospects for sterling. Because last night, of course, we had the TV debates of Prime Minister Theresa May and Labour leader Jeremy Corbyn. There's been a series of missteps, if you like, by May. Sterling plunged last week following polls showing May's lead had narrowed. Meanwhile, the European markets, they remain in the red, as you can see just there. We did have some comments made by the ECB President Mario Draghi while addressing the European Parliament. Now, in his speech, Draghi acknowledged growth in the Eurozone, but said an extraordinary amount of monetary policy support remained necessary. There's also been reports as well that Greece may not pay its next bill to the EU creditors, who are yet to come up with some kind of compromise that meets all parties. Markets were closed in China and Hong Kong. They're on holiday, while stocks in Japan as well, we can see just there, and Australia, they were mostly lower. In Japan, we had the household spending. It dipped 1.4% for the month of April, weaker than the 0.7% forecast. Let's have a look at the Wall Street close. Again, on Monday, they were indeed closed as well. We are going to have, I just want to look ahead because US jobs data, it's going to dominate the week. We've got the private ADP report. That's coming out on Thursday. It's a day later, and that's due to Memorial Day. And then non-farm payrolls, of course, on Friday. As the next Federal Reserve meeting, it's the following week. And we've got the US PMI numbers as well. They'll be closely watched. So it's a very US heavy data week that we'll certainly be watching. And this is the early trade, as you can see just there. But without further ado, let's get over to Melbourne. We've got our market analyst, Chris Weston. He's going to tell us what's been happening there in further detail.
Well, we certainly weren't really dealt with much of a lead, given the fact that the UK was shut, and we've seen the US cash futures and obviously the fixed income market closed as well. And therefore, it's taken a big bid out or a reason to move currency markets around. And I think the interesting situation is when we did come in this morning, in that twilight zone between the close of the American markets, which were already closed, I suppose, and the open of the Asian markets, there was quite a big move in euro dollar. We saw a bit of a move in cable as well, but certainly euro dollar coming under a bit of pressure. And I think it's probably likely that we are going to see euro dollar come into that sort of 111, 110.50 region in the short term. It's moved, the spot price has moved quite sharply away from its traditional bond market yield differentials, and I think that probably needs to mean revert in some sort of shape there. So I wouldn't be fully surprised if we did see euro dollar moving back down to say 110.50, where it probably look to see how price trades, and you may look to buy the dip in that situation, given that longer term trend we're seeing in euro dollar. But there was a bit of a move in the early parts of the day, and that's probably the currency which has shown sort of propensity to move throughout the day on fairly thin liquidity at the moment. Aussie dollar's down a smidgen, I suppose, and we've seen a little bit of economic data coming out of Australia. We've seen building approvals which gained 4.4% on the month, slightly higher than what the market was looking for, but it hasn't really moved the dial in any shape or form. We weren't expecting it to. It's a fairly low beta economic result in terms of its influence on market pricing and volatility. Probably later in the week when we get the private capex numbers coming through and when we get the retail sales number, that you may see a bit of a move in Aussie dollar on the back of that. But certainly we're never going to get it from the building approval numbers. We've also seen in the data, if we stay on the data front, some Japanese labour market data. Again, their labour drivers, their unemployment rate is still very, very low. You're not going to see many developed market nations, coming out with a lower employment rate than we've seen in Japan, but it was in line. We've also seen retail sales, which are slightly better than expected. But again, it doesn't really influence the Japanese markets in any shape or form. It's really being a play on the US dollar more than anything else there. If we stay in Asia, we have seen a bit of a swing in the Australian market, the ASX 200. There's been a big debate about the banks recently, which have such a wide or such a large weighting on the ASX 200 itself. Something about 40% of the weighting of the ASX is explained by the financial sector, which has had a bit of a rebound, and that's going to happen when you see an 11% move to the downside in the banking sector. It's a little bit oversold. We're probably seeing some short covering coming through. No real fundamental reason other than it being oversold to be buying this market today, and that's put some upside into the ASX 200. China's offline today. That's closed for Dragon Boat Day, as is Hong Kong as well. So you're not seeing any big moves or any trade in the Dalian iron ore exchange at the moment. Japan's fairly flat on the day, but But if you look at the US futures, they haven't really moved a huge amount, but our opening calls for European equity indices at the moment are under a bit of pressure. And one of the talking points that we've seen today has been this new pickup in semantics around Italy, and it's probably something that people in the UK will be talking about in a little bit more depth, which is the potential for an upcoming election in that sort of September to October window, and how traders are playing this. Do we look at to see greater downside in the MIB? Are we going to play this through BTP German Bund spreads? But certainly that's another thematic on the radar.
Okay, so as promised, we've got Richard Hunter here. We're going to have a discussion about all the market drivers this week. Hello to you, good morning.
Morning.
It's a shorter week, we've got 4 days. So we're going to talk about, as I say, the market drivers. I just want to touch upon your opinion, first of all, in terms of the economics of last night, because we had the TV debate between the Prime Minister Theresa May and the Labour leader Jeremy Corbyn. And we already saw prior to this sterling plummet because of some poll results. Now, she is not seemingly as out in front as she was initially, and sterling is suffering as a consequence.
Yeah, you're absolutely right. Even though we have had our fingers burnt over the last year and a half in terms of believing what the polls are saying, both in terms of Trump and Brexit, of course, it is nonetheless a worrying development from the market's point of view that what was initially seen as a landslide could actually turn out to be rather close for comfort, because clearly the perception as things currently stand is that the status quo would be the preferred route in terms of the Conservatives. May has already had some initial conversations with the European powers that be in terms of negotiating Brexit, and anyone other than the Conservatives being in power would almost have to be starting from scratch.
Okay, because she reiterated last night in what she said the whole way along is that no deal is better than a bad deal. As far as the markets are concerned, would you agree with that?
Well, it depends. I mean, if you look at the fact that a couple of individual countries aren't allowed by EU law to negotiate with Britain without being part of the EU, the likes of Germany being the obvious one, and of course we've got that high trade between us, particularly in terms of cars, for example. So it's almost inconceivable that the Germans wouldn't want some sort of trade deal with the UK. However, they're going to have the constraint of the of the general EU constitution. By the same token, of course, there are a couple of big positives that May knows the UK has, and clearly she's going to be playing to them. That being said, the kind of horse trading and words that we're hearing at the moment are absolutely what you would expect before negotiations start, with probably everyone putting out a harder tone than will actually be the case behind closed doors.
Lots of beating of chests.
Yeah, absolutely.
That's what we're getting. Yeah. Okay, let's just go through some of the business news that we've had today. We'll get back to Richard and discuss it all, because Europe's largest airline by passenger numbers, Ryanair, has posted a 6% rise in net profit for the past financial year. The airline said that growth this year would advance amid stronger bookings. Sales rose 2% last year to 6.65 billion euros as the airline carried 120 million passengers. Richard, actually, just while I'm on this topic, I just want to get your opinion on what's happened with BA over the weekend. Is this a complete disaster for their balance sheet? What's the economic implications of this?
Well, the numbers that are being bandied around at the moment certainly are running to the tens of millions of pounds, perhaps even up to £100 million. You're going to have the IT rewrite they're going to have to do, let alone the refunds they're going to have to make, the rebooking of flights, etc., etc. In terms of PR, they don't seem to have covered themselves in glory by being quiet about the whole situation for a day and a half. It'll be interesting to see how the stock opens up this morning, because there will certainly be a hit to BA's numbers the next time around, without question.
I was watching a lot of the news over the weekend. It was just heartbreaking. All these people supposed to be on their honeymoons. You've got children excited about their holidays. It's just horrible. I'm going to go through some of the European data that we're expecting and just discuss how this might play out today, because at 9 a.m. it's the Eurozone business confidence. It is expected to rise for a 6th consecutive month, as we can see just there. Also today, we've got Germany's PMI, that's later on, and we have the preliminary estimate for this number. This is a number that we're expecting for May, as you can see, 1.6%. Economists do expect an inflation at 1.6% for the year, after 2% last month. Okay, I want to talk about the Eurozone, just some of those numbers and just how it's going to play out today, because The euro's been quite strong, right? Is that all because of Draghi and his comments enforcing that confidence once again that the stimulus is to remain?
That certainly helped. There's also an increasing feeling that international investors, particularly the US investors, are seeing Europe as somewhere, as something of an investment destination.
What a turnaround.
Absolutely what a turnaround. And of course, part of that is in the absence of yield elsewhere. It's certainly not an area without its own issues. We've still got the Greece situation rumbling on. Youth unemployment is far too high in a couple of the peripheral countries. Having said that, of course, Germany remains the powerhouse and doing extremely well in terms of its own economy. And things in Europe, for the first time in many years, are actually starting to look a bit brighter. You've still got this easy monetary policy situation, as you just mentioned. You've got this potential overseas interest in terms of investing in Europe, particularly the banks, which with some exceptions are starting to get their act together as well. And on the basis that people are looking for investment destinations at a time where there's a lot of political uncertainty, Europe seems to be near the top of most people's lips at the moment.
I want to talk about OPEC and oil because it was a big week last week, as we know. But actually, in terms of the oil price, it's all about the supply glut issue, isn't it? And the rigours that we've had in America and so forth. So it seems to be an OPEC versus US oil situation.
Yeah, very much
US
so.
shale.
US shale, that's right, and they seem to be ramping up production at a fairly full clip at the moment, which of course at some point is going to come home to roost. That being said, the fact that Russia and Saudi Arabia seem to be on board in terms of limited production will help, but we are of course aware that there is a global supply glut of oil anyway at the moment, although some of the top will come off of that as the Americans move into the full driving season over the summer, of course. So there will be a spike in demand for oil there, but nonetheless it remains pretty much on a knife edge, and of course it's got implications for all sorts of markets and currencies.
Let's talk about the US data that we've got this week, because potentially that might be the main driver, because we always have the non-farm payroll numbers come out on the Friday, and sometimes we see the markets rather quiet in anticipation of what's going to happen. Will that completely reshape the markets this week?
I think that it will be as usual. If there's a particularly strong or a particularly horrific number, it's likely to move the market. If it's anywhere in line with the consensus, it's going to have a limited impact. Of course, it will also be another factor feeding into the widely anticipated June, and we're nearly there now, Fed rate hike, although the Fed very much maintain that they're going to stay data dependent and that any interest rate rises anyway are going to continue to be fairly gradual.
And Richard, what else is on your radar this week?
Well, in terms of corporate announcements, it's extremely quiet. It's probably time to reflect that Q1 was overall a pretty good set of numbers on both sides of the pond, including, as we were just talking about, Europe as well. So there's not much to look forward to on the corporate side. I think as we move into early June, we've got a couple of big things to look out for. That Fed rate announcement, of course, not to mention the UK general election. So in much it's the same way as companies probably came to the forefront in May, I suspect economic data will come back to the forefront in June.
Okay, Richard, thank you very much indeed for your time this morning. That's Richard Hunter there from Wilson King Investment Management joining us today. Before I let you go, let's have one last look at how the markets are set to open today. As you can see, it's looking rather downbeat. We've got a sea of red this morning, this Tuesday. Thank you for watching and have a fantastic day trading. Goodbye.